Good morning, West Pacific Market Analytics here, and it's Glenn giving you a morning coffee market daily update. We're probably going to have a few of these this week. We'll see how many. We got the holiday shortened week here with only a 4-day trading day, so we're going to get towards the Wednesday, Thursday area, and obviously volume's going to thin, and that can work one or two ways in the market. Thinning volume is not necessarily a good thing when you're in a downtrend. So we're going to have to see how this performs here in the next 4 days. I'm not expecting much. Let's take a look at the models and let them speak for us. And I want to start out with one model in particular and remind you of a rule that's very important here to my walk in 40 years of data analytics and 10 years here working on this particular new direction in market analytics. I set a new direction. I wanted to have a rule-based, opinionless-based system for looking at market data. That was very important to me, and that is what we do here. So let's just not have much chatter. Hope you had a great weekend, and wishing you all the best here into the coming week. Just quickly the disclaimer: educational entertainment purposes only, and always please do your own research. Keep a very solid risk strategy in place with rolling stops, and protect always every trade you do. Now let's jump into it here. First of all, let's start off with a few of these models I'd set up. And everybody, let's let the model make the opinion of when we're going to have a low. So we can see here this low. Here's our indicator. This has nothing to do with the market. As far as the SPX, I only care about this indicator because it timed the low here and the market also had a low at the same time. And you can see here's our low in 2020, breaking well below the dot curve. You notice here how it held the dot curve, held the dot curve, held the dot curve, and then we had two breaks below the dot curve. This one made sense because it had to come down. You notice how velocity was coming out, trend was coming out, and thus we got a much deeper signal. This signal was just a brief one, and right about that point you can see then the velocity came in as the Fed printed 3 trillion, if not more, dollars. I'm not sure if they gave us an accurate number on that. They say 3 trillion. And then you can see here in our 2022 low, we got a really deep signal here with the rollover in the trend, but poking very deep. Now we knew on this deep signal it had to go back up because our velocity was still up here. And then we had this low again right to the dock channel this time, which made sense because we had two other times it hit the dock channel. And now we want to see what it does. So we can see the trend is only up here right now, right? Let's go over here. So the trend's only right here, the red indicator. So I want to see what happens when the red indicator gets down here to the dock curve. And then, of course, what we're going to want to see if we get this trend come down, and you notice our velocity now is breaking very aggressively here. And this is carrying us out right here to our June 6th to 9th target. And velocity could come down pretty far, but we're going to want to see. So when that red gets down here, we're going to have to take a look. Is there any velocity above to bounce up into, and how does that look? But what I'm saying here is we really only want to look at these indicators to tell us and take out our opinion when this move is over. We can see the same thing here. You notice the trend bar is only just breaking. The signal here is still open below. So you can see here in this move back in October of 23 when we had this low at 4,100 and then the market continued up, there was no signal. You see that? And the signal told us that, okay, all bets are off short. Let's get the heck out of Dodge and let's go the other way. And again, you can see here the series of signals. Now, you got to be careful because obviously you had this signal down and then it only went up a little and then it came back on. So this is, just one way to look at it, but it gives you an idea that you can notice the valleys here and then this completely open area where absolutely the market was just moving up and the market was just moving up. So we're going to be watching very closely a series of signals. Now there's many more, but I just wanted to get into those few on our chat board this morning. I was telling some of the members, take your opinion out of it, take your emotions out of it. There's been a lot of emotions this week. Now here's that model I was talking about, rate related, and it's interesting because you notice last week we had all these red spikes here relating to the rate complex. And that's pretty rare occurrence. You can see we had a little bit of a hiccup here in that August sell-off. And you can see back in the banking crisis here, we actually, yes, you remember that when all those banks were failing, that the Fed bailed out, including Silicon Valley Bank. Well, Silicon Valley Bank was when we had this swoon right back here. And could this be indicative of more banking problems ongoing? But what we can see now is the trend is all the way here. So this trend has got to go completely all the way down and then go from being open to closed to allow this red indicator to drop below the gate. Now, if this were to start to spike down, it did that in 2020 and the market had a radical move down. Now we're chopping around here. We can see these dots. This is the market. You know how the market's just kind of tumbled down into this? This is something I want to watch very closely, not this week, but even going into the week after Easter. And I'll tell you what, we'll look at this. I will come in here on Thursday before the market closes down, and we will look at this and say, hey, if this signal is still running down here and this has not changed, there is no way you want to be long this stock market in any way, shape, or form going into the holiday weekend. We could see some sort of event potentially over the holiday weekend. So that's something we're going to take a very, very close look at. Now again, a couple more low signals here. You can see low here, low here, low here. You notice our red indicator and even our market. You notice the market and the red indicator pretty much bottomed out. We're still up here. And you notice how this red indicator, this big candle, we came last week back up to the red indicator. So the red indicator is still working down. That red indicator has the potential still to come all the way down to the gatekeeper line, moving average gatekeeper line right here, but actually this red indicator needs to price all the way down here into the V channel. So you notice here collapsing momentum within the V channel, sandwiched between the dot curve, sandwiched between the MACH, the momentum of circulation, and the directional of the circulation of the momentum, the velocity of momentum. So this has got a lot of work to do. You know, there's just not a lot of things that are real pretty. And I'm going to show you one other thing really soon here. You know, here's a really big picture. This was interesting because you notice this signaled a low all the way back here in 2016. This signaled a low here, and you notice we even got a signal low here. We got a signal low here. We got a signal low here. Now this red gets down into here again. Then I'm going to want to get a bit nervous about this move coming down being over, but this could continue to break lower. It's only one indicator, but we still got room here at least to come down a little bit more here. This is a really, really big picture. We're talking about a quarterly model here, but I just want to show you that there is room still. You notice we had 3 big quarterly candles here. This was interesting because I like to look at quarterlies, and we actually need to do this more often in our big picture, long perspective, month-end closing. You notice how the setup of 3 black candles and then a white candle and a white candle. Well, that's a bullish reversal pattern right there. So actually, even here at the low in 2022 on the quarterly pattern, we had a bullish reversal. So it'll be interesting to see how this sets up here. We're going to watch this quarterly model more going forward, and I like this one a lot. Now let's go right here. This is an extremely important model here. I don't want to get this morning update too long, but I think it's going to be a bit longer than usual because I think it's very important. Again, all we do is rule-based, is it takes out opinion. We only care the model's opinion once we understand the rules. So in this model, what the rules are is red indicator moving down allows the market to move up. And you can see we're going all the way back to 2009 in this entire rally. Well, what we're looking at here is the carry trade. The carry trade unwinds. That will be a major disaster for the stock markets. Now you notice that it was constantly moving down. Look, right at the top of the V, right at the top of the V, but it was able to move down because it was dropping into trend and dropping into velocity. You see that? So it's dropping into it, it's dropping into it, it's dropping into it. You can see here at this little move at the 2020 low, you notice this spike. So when it rises, but we knew that had to end because the trend was still down here. But notice what's happened now. We've hit the very bottom of the MACH of the V channel. This is as deep as we can go. And notice now that it has broken out. You see that right there? It is now broken out above the V channel. This is the first time since the 2009 low that has ever occurred. You notice now the trend bar has bounced up, And look at how over time here, since 2019, velocity has been going up. Now this red, now it's broke the other side here of the black line, which over time becomes a red line, and this will now then turn up, potentially become a black line. That this needs to price here. It can't price down here. Yes, it's been able to keep moving down, part of it because notice from here it was moving down a trend. So if this trend starts to rise and velocity starts to build, this needs to go up here. And now what's happening is there's no trend below. So both the trend and the velocity rising are tugging or pulling this red indicator up, which will cause the market to come down. It's a very, very ugly looking model, and I'd be very careful what we think about that. So we're going to be watching that a lot. Here's one other model. Let me just take a sip. I'm actually having a cup of tea here early this morning before I head out to work. Okay, let's look at this. I call this the 1932 trend. Now, what the 1932 trend is, you see this gray trend? This started back in 1932 after the 1929 to 1932 big bear market move. And there's different ways to look at the 1932 trend, but this is another theory and concept I've been working on that I find that nobody else is looking at. And it's extremely important when you're looking at technical momentum models that are trend-based. And we can see right now that this whole move, you notice here how we rolled over here, the trend topped out as the market started to come down the velocity. And we're looking at the SPX here. So what's important, as long as velocity continues to drain, the market's going to have a very hard time moving higher. And this is a daily model. And you notice how here we were able to kind of price sideways as velocity was coming out because the trend, I call this trend catch-up, right? So you notice as the trend was coming down and finally this came sideways, trend caught up, and then we started to go down again. Now notice we oversold to the trend again and we came back up. Look, we got to the dot curve here. We held the trend, and notice the trend is right here while velocity continues to drain. Now, like I said, we could get a little bit of sideways action in here, more pulling to the downside, but until we see a change in the collapsing 32 trend and in the collapsing velocity, again, you just can't get a rally. Let's finish with this. This is the SPY model. We've got one last gap above here at 578.50. Now, I don't think this is going to be filled. You notice the market's down here right now, and it's not possible to get all the way up here with all that data we just looked at. So my thought is at some point that could come into play with once we get down here to our A low. Now, we can leave gaps above and gaps below because you see all these red lines here? These are all unfilled gaps all the way back over here when the market went up. So you can leave gaps above just as much as you can leave gaps below. But what I want to watch now is we have this corrective move out into our June date. I think we can get there. You can see the whole thing collapsing out in here. It could be a little bit longer than June. I want to see how low we get. I've got a target around 4,600 where I want to start getting wary, which wasn't too far below. But I got a feeling this is going to poke down lower, maybe even fill all these gaps. You notice we got one gap down here on the SPY. At the very last gap is at 385. So I want to watch that very, very last gap. Somewhere down in one of these gaps is where we're going to get our A low, and then we're going to have our big rally back up. It'll be interesting. It'll be a summer rally, right? Now the question would be if we took the fib retrace all the way to the last gap, the 68.1% comes in at about 524, but could we get almost a 78% retracement and even fill that gap? So I'm expecting this to sell off and then the potential for a very large B rally on the other side that could take all of summer to complete. But that's something down the road. Let's just worry right now about this A low, and then we'll talk about the retrace on the fibs and all that other thing. This is just a planning model for me, and we'll look at that ahead. So let's not waste any more time. Let's get out of here. Get yourself up and get yourself ready for your day. I'll be back at you with a lot more data. Hit the like, hit the subscribe. If you want to join the member platform, it's a really great place to be. You can't imagine the amount of data you're going to get over there. Posted all the crypto models over here into the platform this weekend. We've got a lot of data for you to look at and consistently updating over there within our different categories. So if we go over here, we're constantly putting data here into all these, the commodities, the cryptos, the key weekly signals, finance, globe, the QQQ SPY, We've got a sector, semiconductors, our top internals. Of course, our trades, we've got a lot of trades we've set up over there. We're watching even GME, the yield bond sector, and of course what we call our top 10 stocks, which is where we monitor the what I call the top 10 models, which is something you look at if you go over there. But anyway, have a great day. I'm wasting time. Let's get out of here. Glenn out.